Welcome back, everyone. Many of you asked this week, Simon, what's on your watch list? If you had to buy some stocks, which would you buy? What are you adding to your portfolio? So let's do this. I'm sharing my watch list with you. We're discussing this in the Sprint Club. 180 of us are discussing. Join the discussion if you want to join the Sprint Club. It's on the App Store. The app is called Strategy Sprints, and then you jump into the Sprint Club. The first quick look is at high quality companies. So what makes a high quality company? We want it to be growing earnings per share at more than 15% annualized, and we want a return on capital employed above 25% ideally. So in that category, this week we have Booking.com, MasterCard, Spotify, Google, FICO, Kinsale Capital, Novo Nordisk, TSM, PDD, Pinduoduo, and NVIDIA. Let's have a look at them and see which of them are actually valued in a way that we would like to buy them, because definitely some of them are not, right? NVIDIA is not in a valuation that we would like it. FICO is not in a valuation that we would like it, unfortunately, because it's an amazing company. So let's dig into some of the valuations, some of the opportunities. Let's look at some companies that I am looking at. So let's jump into the Sprint Club, where an hour ago I have shared my watch list, which is Nubank, MSCI, Spotify, and PDD. Some of them might be completely new for you. Let me tell you them. Nubank. Today is Monday and markets are closed. I think tomorrow there is a good chance on Tuesday that Nubank will dip because Berkshire Hathaway has sold half of its position, and that usually creates a dip in the market. So the price to sales is 7 and the company is wonderful. So I am inclined to add to my current position. Let's look at Nubank's fundamentals. Operating revenues are doing this. It's perfect. Then let's look at NOPAT. NOPAT is accelerating even more. This is what NOPAT's doing. And then the EPS, earnings per share, perfect and sustainable, I think, because they have more countries, they have more services that they can add, and they don't have much competition. If you remember, Melly is playing tennis against grandma when it's about financials, but it's playing tennis against Naval when it's doing e-commerce. Now, Nubank only has financials. There is no e-commerce, so it's only playing tennis against grandma, which I really, really like. And I hope that it dips because I want to increase my position in Nubank. Let's go to the next one. Next one was MSCI, former spin-off of Morgan Stanley. Wonderful business model, great company. I did a lengthy deep dive on MSCI. Go watch it. It's called MSCI Stock Analysis. I did it 6 months ago and it's still relevant. I shared why I'm bullish MSCI. Now, I think it's currently expensive at 16 price per sales. Having said that, genius super investors, better investors than me, like Dev Kantesaria from Valley Forge, they have been adding. So I might be wrong here. Let's look at the fundamentals. The fundamentals were amazing. This is 6 months ago when I made the video. But my sentiment has cooled off because recently we are seeing some revenue decelerations that I don't like to see. Now, 93% of the business is still recurring, so nothing to worry there. You can buy MSCI, and there have been this summer there have been insider buys from executives at MSCI. So I think it's a safe bet, but it's not growing that fast. If we compare it to Spotify, PDD, or no, they are growing so much faster. Let's have a look at PDD. PDD, Pinduoduo, which is, I compare it to Amazon mostly. It's not an accurate comparison, but it's e-commerce, and it's organized in a way that you get a perfect logistic, you get it very quick, and you get it fast, right? And historically, people had to organize and to find others who also want to buy it. So there are some flywheels and network effects baked in that I really like about. It's currently very cheap because it's at a price to sales of 3.5. If this company was in America, the price to sales would be 15, 20 probably. It's growing. Let's go into some details. So first, I like the relentless culture. They are real sprinters. They work hard and they want to win. It has roughly the same gross merchandise value of Amazon in its e-commerce, and it did it in 1/3 the time it took Amazon to get there. The shares reacted negatively when they recently decided to reinvest some of their margins into even faster growth, and I like that. Similar to Amazon. When Amazon decided to invest into the moat, basically the price went down and they got penalized. This is when we bought. Now, it's growing 4 times faster than Amazon. That's amazing. And yet the shares at price at less than a quarter of Amazon, because it's not in the US. It is in a hostile environment in China. So there is some risk. You do not want to compete with the demanding corporate culture of PDD and Temu. Its operating model is relentless at identifying efficiency throughout the manufacturing and selling supply chain. Not only it's a more formidable competitor than Amazon and growing faster, but the valuation is 4 times more attractive than Amazon. Now, Amazon has a cloud business, and an ad business and the streaming services. So it's not a comparison to the full company, but it's a comparison to the e-commerce business of Amazon. So this is what I shared 44 minutes ago in the Sprint Club. I mean, have you ever seen a more beautiful fundamental? Look at this. EP, earnings per share, perfect growth. NOPAT, perfect 45-degree angle, and operating revenues are in a parabola. So both operating revenues and earnings per share are in a parabola. NOPAT, and it's sustainable because it's priced at 3 times sales. Again, in the US, this company would be priced at 15 to 20 times sales. So I think it's a wonderful company. I'm not invested yet, but I'm watching it closely this week because, yes, the fundamentals are so strong. Next one is Spotify. I think Spotify is great. I use the other product. I use Apple Music, but Spotify is an amazing product. Many say it's better than Apple Music, and it's growing like a weed, especially here recently. It's been accelerating. So if we look at earnings per share, boom, that's a jump. NOPAT, sustainable 45-degree angle, perfect, and operating revenues. So I'm sharing only the best companies that I'm looking at right now, right? And so they are really, really amazing. So that's what's on my watch list, guys. Let me know what you need next in terms of wealth building. How is your portfolio going? What is on your watch list? Enjoy building wealth slowly and in a reliable way. Our cash generation strategy is working really, really well. So we have closed some puts this week, made a couple $1,000s with very low risk. So I hope your portfolio is growing. Keep rolling, everyone.